Boom, 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 boom. Boom, 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 boom. All right, guys. There is a new kid on the block. Well, not really. It's been there for a while. It's nextbigtrade.com. I don't know why. I just fell on bigtrade.com. Twitter was recommending me as a follow, and I followed, and then I said, whoa. Because when I started my Secretwars episodes series to revisit Stan Weinstein Sage Analysis, I started Googling, trying to reach out to the community, see what was new, what was out there. And I fell on stageanalysis.net. And now I fell on nextbigtrade.com, guys. Go see the website. Oh my God, lots of stuff there. Screeners, documentation, videos, has even the podcasts on YouTube. Whole bunch of stuff, guys. So this is, I'm going to have my hands full for the next few weeks there to dig through that. And lo and behold, I was having fun with his screeners, looking for some Canadian stocks. And ATU, guys. ATU on the TSX Venture, Altura Energy Inc. And look at that. You can see it right away. This is my top to bottom approach, starting on the monthly candle chart to validate the direction of the wind, of the trend. Let me scoot that over, explode that. And I start by identifying my monthly defined support. Very important, because you want to expect that resistance or support on the smaller time frames, which will seem to be invisible, and then you get a pullback out of nowhere. Well, go check the monthly, the higher trend. Was there monthly defined resistance? There you go. So right now, this is how pattern within pattern. So you have this pattern, this launching pattern, making a bigger pattern, further away target. And after that, maybe a case here. So this is at the end of the month, guys, one more day. And this is a monthly candle breakout. And you know how I work. Targets, applied measure moves added to breakout lines. The bigger the pattern, the further away the target, the least probable it is. See, this target was already attained right here with this candle, this breakout candle. And now you have the bigger pattern, giving that target all the way up here. Bringing you close to that higher resistance right here. So that's about it. Unless I can't eat potatoes, this is a one-day close. Well, tomorrow's going to be the 31st when this is going to be broadcast or published on YouTube. If at the end of the day it doesn't pull back below 55 cents, if you really want to be conservative, that if you've identified this as your breakout line, then you're golden. But I think the more powerful patterns are the ones closest to the breakout lines. The further you move away, that's why bigger patterns with further away resistance defined, you'll get choppy waters before you get to your target. So this is really the takeoff pattern, and we're going to see this really good on the weekly. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17. I could count. So this is like a 17-month plus consolidation pattern. That is huge. Let's just go see if there's volume there. All right, let's zoom in on the weekly. Okay, weekly. 55 cents, man, is my ultimate. Okay, what do we have here? Could always like reverse engineer. I look at the candles, like you could tell right away. You see the average volume, then you see these spikes. Right away you could tell you could look at and you could almost guess where the breakouts are without even looking at the chart. Just by these crazy candles, which are supposed to be twice the average of the previous 4 weeks, 4 to 5 weeks, and this one is a lot more. Okay, let's analyze this. Remove all trend lines. Okay, Ichimoku Cloud is there. Something I picked up from Isa Trader on stageanalysis.net. Helps you identify support, resistance, and the longer you're in a stage 1 or 3, the thinner the green and the red cloud are. Green being the support, red the resistance. And you just don't want any red cloud above you when you're trying to breaking out. It could slow you down. And you don't want green cloud below you when you're trying to play stage 4 breakdown. So right now there's nothing above, nothing below. Remove that. Clean up the chart. Look, unfortunately I don't have the Mansfield indicator. But using the RSI, I've gotten good results on giving me the strength of the stock. Going up. Crazy volume. What else do we need? Stan tells us we need a horizontal breakout line. It's here. Here you go. The weekly defined breakout line, 49 cents. So here's a formation, breakout, 30-week move average starting to go upwards. Guys, 40 to 50% move of the stock before we even get in. What's that, like 35 cents? So it's done that, and that's what you want. You want the price action pulling it up. So how do you enter here? Somebody could have entered here on that breakout candle. Put the sell stop below the pattern down here. That's your risk position size, according for not to lose more than 1% here. That's the investor's way. Trader's way. The safe trader's way is below 30-week moving average, below the breakout candle. That's the safe way. So if you want to do the trader's way of setting your sell stop, you'll get a slightly bigger position size for that entry. And I think Stan even says good breakouts never pull back more than 4 to 6% below the breakout line. And you really want to be tight and have a bigger position size. You could put your sell stop below a round number, below 6% of the breakout line. But I'd rather not do that. I love the investor's way. Further away, smaller size, sleep at night. No worries. That's the way I do it. Let the stock start to marinate, move up, do whatever it has to do, and then you're good to go. After that, what do you have? Expecting the pullback. Contracting volume. Usually it's within 1 to 3 months. Now start pulling back already immediately. And after that, starting to go back upwards. It would have been hard. What I look for is a pullback close to the breakout line on contracting volume. Right now it pulled back, but if you estimate that the breakout line was 49 cents, there's not much. It didn't get close to it again. Didn't get close at all. Definite stage 2. Confirmed monthly candle breakout at the end of the month. And that's all she wrote, guys. What I would do for this one now is maybe you could send an alert in case it pullbacks. Maybe it's gonna want to pull back some more. If ever it goes back down here and upwards on contracting volume again, then you'd have an opportunity to get in. If not, then all you have to do is going to have to wait for eventually it's going to move sideways. The 30-week average is going to start catching up to it. And then you could have another consolidation pattern here. Breakout candle, breakout volume, and the RSI could have slowed down and then go back again above the halfway point going up. That's how you do it, guys. If you really want to enter here, well, your sell stop's all the way down here, so you'll have a small position size, and then maybe take half a position here and the other half when you get the pullback down here. It's up to you. If you're starting to try to always figure out crazy ways to enter, right there, that's a warning sign. Use that as an excuse not to enter, but use that as an excuse to not enter. There's other A++ setups where you'll catch it, the breakout candle right away when it happened. There's other stocks where you'll have a chance for a pullback. Even this one could pull back now, so why pull the trigger and get in here? Just wait for the pullback. If it happens on low volume, you get in. If it never pulls back, then it doesn't matter. There's other stocks that are in the process of pulling back, which you could get on track, which have a better increased probabilities of having successful trades. So why jump the gun here just because you spotted that chart? Look at the most charts you can, and that will reduce your emotional landmines, chances of landing on those emotional landmines and not choosing the optimal chart. All right, let the chart choose you. And if you're hesitant and you're trying to find excuses to get in, ways to get in, play with the position size and start to sidetrack away from your framework, strike one, strike two, and it's those 1% losses that add up over time, guys. Then you start shooting for Hail Marys. You're looking for crazy risk-reward ratios. Not good. It's a game of errors trading. The least errors you do, and you'll see success. It'll come pretty sweet to you. If you keep making errors, well, I'll slow you down, guaranteed. I'm going to keep an eye on the ATU. Keep the chart open. And see how my alerts get triggered. All right, guys. See ya. Ciao.